Positive factory data out of China has led to improved global market activity. The rand has also started showing signs of strength, while the JSE gets off to a positive start. Chief Investment Officer at Makwe Fund Managers is Makwe Masilela, and he speaks to us now. Mr. Masilela, thank you very much for your time. Let's start with the global markets expected to continue on a positive note today in trade, you think?
Not necessarily, because we start seeing that, yes, we did manage to cheer those good economic numbers that came out of China, but the fact that you start seeing some U.S. Treasury yields going up, and now that starts to dampen the mood, and also the fact that we expect interest rates to be increased aggressively going forward. That's not okay for the market. And long as we continue to see good economic indicators coming out, that confirms that interest rates will stay at elevated levels. Hence, the markets today opened in the negative.
Let's talk currency activity. Can we expect the rand to gain further strength given the current developments?
You know, as long as we expect interest rates to go up in the U.S., it means people will continue to demand what they call dollar-based or dollar-denominated assets. And for you to be able to buy that, it means you must own dollars. So as a result, there will be demand for dollars. Then we'll see the dollar continue to strengthen. And people will start to win that because they strongly feel that interest rates in the U.S. will continue to go up. So they're getting also a decent yield as well. So that will be negative for us. And then also remember, if long as when you look into the resources, probably they can cushion the blow when it comes to the rand, because as we continue to expect to see the reopening of China continue to benefit global economies, then it means there will be demand for resources, and the rand itself is a commodity currency, so that can lessen the blow when it comes to the rand itself.
You talk commodities, let's talk about gold and oil. They've seen gains too. This is in spite of the inflation fears. Those are seen as an impediment. Tell us about this dynamic.
Very critical, starting with oil itself. Remember, as you start seeing U.S. crude inventories continuing to go up, that itself is an indication that there's no demand. But the minute you start seeing the reopening of China starting to get traction, as we have seen in the latest numbers, even though we're still looking for more evidence that the Chinese economy is growing, then it means there will be some demand of oil going forward. So oil prices will be caught up between those two, that here there is this hope coming from China that there will be demand because they are opening the economy. And on the other side, we've got other economies not doing that great. So we have to strike a balance. And gold prices, remember, as much as the US dollar can maybe weaken, then it makes it cheaper for holders of other currencies to buy gold. But the fact that we expect interest rates to go up, that gets to be negative for gold itself, because there's an opportunity cost of holding gold when interest rates are going up. And gold happens to be more sensitive to interest rate rises more than to a weaker dollar.
Let's quickly tackle company news, starting with Curo Holdings. And how are their figures, or how is their performance given the release of their latest financial results?
Their business model continues to be resilient. I mean, yes, we know the guys have been very strict, getting rid of those long overdue accounts, but still managed to increase their learners by almost 3.7%. That's good. We've seen their revenue going up by 17%, their profits as headline earnings per share up 50.1%, and their dividend yield or their dividend payout increasing by almost 35%. And this is the company that is expecting to spend almost 800 million this year to maintain, replace, and also to expand some of their facilities.
Let's conclude the conversation with Impala Platinum, also releasing their results. Talk us through their performance.
Their geographically spread footprint is helping them, to fight all this challenging environment, high inflation, load shedding in South Africa as it is, and also a strong demand of their products, coupled with a stronger rand PGM prices that help them to be able to deal with this high broad-based inflation. And as it is now, we have seen that their revenue will be going up by 4%, but their cost of sales as well up 8%. Hence, you see their gross profit down 4%. And you look into their profits as headline earnings per share, they're expected to go down by 2%, all because the guys had to issue more shares. Remember, that was part settlement when they were acquiring shares from Royal Bafokeng Platinum, and their dividend payout has been reduced by 20%.
Chief Investment Officer at Makwe Fund Managers is Makwe Masilela. Thank you very much for that market update. All right, let's get you